Good afternoon, traders, and welcome to another Profiteer Trading video. Today we're going to show you guys a video that we made earlier on how we traded the Bank of England rate decision. Go ahead and read the risk disclaimer and make sure you remember that trading futures and options is a substantially risky endeavor and is not suitable for all investors. Opinions, market data, and recommendations are subject to change without notice, and everything we tell you, everything we talk about, is simply for educational purposes only, and please do not take it as direct financial advice. All right, let's get started.
Trading the Bank of England rate decision. And we're going to keep the video fairly short and sweet, so we're not going to get too in-depth with analysis, but more so get in depth of how you can do this yourself by like a certain period of time in your journey when you're more experienced and you have a better handle on how to work the markets in the moment and interact in the moment. All right, let's get started. All right, let's go ahead and share this with you. Okay, guys, so what I've got here is a view of the pound on the futures, and you see on the left we have the TPO chart as well as the technical analysis daily candle chart on the right side. Now let me get my pointer here for you available. Okay, so a couple of things to focus on here. When you look at the TPO on the current profile, something that you can notice is that there's a couple of caves that were living here prior to the initial move that we got today. So let's ignore the move that we got today and focus on the fact that prior to the interest rate decision, we had just this block of liquidity developing, okay? So basically what I'm telling you is all I had to look for was where that liquidity was missing based on the previous trade. So this is number one, zone number one. And I'll go ahead and mark that for you so I can really get this point across. So between here, you see that gap very clearly. So for those of you that are learning to zone, I want you to understand that when zones have gaps of liquidity like the one you see here, it is a very high probability, high likelihood that this would end up getting filled eventually. And that is what led us to the trade setup that we took this morning on the interest rate decision. Number two, this liquidity gap here also opened up the door for a retest of this zone here. You can see that on the 27th, we built out a B shape. We've talked about the P shape. Now let's talk about the B shape. Here's the B. Now, what does this mean? It means that anybody who was long up here ended up getting liquidated and the price came down to this hard level of volume at 138.0. So moving back to today's trade, you can notice that on the development of today's block, when the interest rate decision occurred, what two areas did we head back to immediately? Well, let's go ahead and take a look here. So we can see on the first bid up on the single print here, you can see that these single prints define a large move where liquidity was just shot through. Here's zone number one, broken. So our first target was living at 75s. Target number two, broken. Our second target was living at 3100s. Two simple targets for a fundamental news event that was providing this opportunity to fill liquidity with acceleration and velocity. So by objective opinion, or by objective trade setups, this is objectively a breakout trade based off of a fundamental news event. So that being said, I would like to show you guys how I reiterated or how I gave more conviction to my setup by looking at my traditional technical analysis here on the candle chart. So notice here we're looking at a daily candle chart, okay? This is the price action throughout September. This is the price action throughout November, October, December, and then here we have the current month's trade, where you're seeing that we have quite a bit of consolidation occurring after the break of this here, this parallel channel that we developed from the initial yearly swing. And what do I mean by that? Well, if I back up here on the time and I show you what the price looks like over a year's time. So right here, you see 2019 over to 2020, right? So take note that there is a parallel drawn here and here. And for sake of education, I want to go ahead and show you how I did that. And I'm also required to say this. None of what I tell you or suggest is a financial assessment or advice to you. So everything I tell you is basically just humble opinion. So please take this information accordingly and remember it's for educational purposes only. But let's show you how I drew this parallel again. Okay, I take my parallel here. I hit the low of that swing low. I hit, and remember, this didn't happen yet. This was here because I drew this parallel on the beginning of last month to the high of the year here. So you can see there we have a parallel channel with a midline, and you can see something very important has happened. Okay, let me take you to a 1 hour chart so it makes more sense. Look at that parallel line and how price reacted the first time that it broke. So first, we bounced off of it here, made a bid up into the yearly closing range because this is 2020. So we closed the year at highs on the pound. We then pulled back into a zone, retested, couldn't break a new high, and then flushed through acceleration. And notice how buyers stepped in here. Let me delete that real quick. How buyers stepped in here. They tried to bid the price up, and then you saw a rejection at the yearly opening range from last year. Last year's yearly opening range. This is an insanely important point of this video, and I want to explain why. Because notice, we retested at the monthly opening range. We failed. Found support in this new trend line that we've created here. And then basically did some sideways action with a retest of a high from the previous month's action. And then today, most importantly, during an interest rate setup and decision, where were we trading prior to this decision? Right here. So we were basically coiling, meaning getting ready for a burst higher based on what we saw in the technicals. Because remember, guys, it's all about the technicals. So for me, as a day trader, when I woke up this morning and I had all this analysis already done from previous days of doing my analysis, as long as this pink line did not break, there was really not much reason for me to get short. Sure, I could have tried to short it to the pink line, but due to what I was seeing on this volume profile development, where we were making an attempt to break value area, it made more sense to go where? The yearly opening range from last year, because this level holds so much significance that it was, on a statistical basis, a much more reasonable attempt to take it to that point. Now, something else I want to point out is if you look at this pink line that I've showed you here, if I zoom out on my chart and I make this full screen and I go ahead and do a 1 week chart and fix this up here, notice that, even though you see this insanity, notice that these pink lines are actually part of a pitchfork, inside pitchfork, that was developed in my analysis a long time ago. And it is not a coincidence that we managed to hold that pitchfork. And I'll tell you, on a long-term basis, I still have a trade setup that is waiting to be initiated in. And it's that if this upward parallel slope, and what do I mean? I mean this slope, this pink slope going upwards, if this breaks through with acceleration and buyers don't step in, then I'm looking for this as a long-term target for the pound, because we would still be in an uptrend. But based on knowing your market and me knowing this market, this level is starting to get exposed given the break or the retest of this upward parallel slope. Okay, so as simply as I can put it, guys, that is how you do technical analysis. It's completely arbitrary. It has rules based on what technical analysis rules are, but that's it. It's arbitrary to what you see fit. So don't overwhelm yourself trying to find the perfect trade and asking yourself, is this right? Is this wrong? Is this right? Is this wrong? Nothing is right or wrong. It's all more or less up to an interpretation trade. Okay, so let me just reiterate one more time. First target on the pound today was 30.70. Second target was the yearly opening range from 2019 at 3,100. That is all I had to do. All I had to do was find the gaps.
CFTC voting 3-2
the
to
technical
approve position limits
exposed
on
levels,
25
and
commodities.
then take the trade and manage my risk accordingly. So something I noticed in the Profiteer room is we get a lot of traders who are kind of like constantly wondering, like, how should I draw my zones? How should I do this? How should I do that? As long as you've taken the time to watch, classes or whatever that teach you how to do it, just revert back to those basics and make sure that you've completed those basics, and then there is no right or wrong. So for sake of educational purposes, I'm going to show you guys how I draw a zone. So here is my pound dollar. I'm going to grab a rectangle here and I'm going to drag it across here, because remember, the rule is as long as price action touches 1, 2, 3 times, then that is a zone of validity. Now, get creative with it. You don't always have to draw horizontal zones. Maybe you see a trend-like move that you would like to zone off. And what I mean by that is if I take, say, a rotated triangle. Sorry, guys, my computer's like freezing up on me because I got a lot going on. If I take a rotated triangle and I draw a zone from, say, here up to here, and then I zone it off, then that has validity. Or if I do this, that has validity. And why? Or if I do this, that has validity. And why? Because look, 1 touch, 2 touch, 3 touch, 4, 5, 6. You get it. It's a trend-like zone. And all these things do get interacted with when price meets it. So it's not a coincidence that the pound has been bouncing off of this trend-like zone for quite a while. And guess what? If it breaks, then you are exposing a major sell-off into a previous support. And that is how I know to look for those setups, because I've watched this market before and I've seen what happens when trend lines are broken. It causes a accelerated selling, because anybody who's been getting long here, they've got to get out knowing that this thing's exposed to a full head and shoulders retracement. And that's another thing. Arbitrarily, I can choose a pattern that I see fit. So right now we're talking head and shoulders, and draw it out how I want. But there is nothing that says that this is objective. The only thing that I can say is that this is a usual technical analysis pattern that could potentially play out in my favor. There's no right or wrong. So please don't get caught up on right or wrong, and simply get caught up on how to manage your risk and being confident in your analysis. And if you're not confident, then back test, use demo, but don't waste your time. I need to reiterate this. Don't waste your time focusing on profits and loss. Spend your time focusing on your analysis, on your trend lines, on your pitchforks, on your Fibonacci's, on your volume profiles, on your deltas, on your TPOs. Forget right or wrong. Just make sure you have those basics right. And you'll know if you do or don't by simply coming in the room and asking us. It's not a question of like, did I do this right or wrong? It's a question of, did I do it the way that I learned to do it? And if so, then yes, it is correct and should be interpreted in the way that you feel makes sense to you. Stick to your ideas, stick to your style. Don't try to absorb too much, because there's way too much in trading that is subjective that won't really help you in the long run. Okay. So now that we've gotten that out of the way, let's go ahead and show you guys what happened on the pound this morning. So let me pull up the video. Let's go ahead and share this with you. Sorry, guys, give me a second here. New share, movies, share. Okay, so now you should see the little order ladder, and I've tried to make it really simple for you guys by trying to basically show you just the bid and the ask. And what I mean by that is, like, you could see here's the levels of the bid, and here's the levels of the offer or the ask. And then in the middle here is just the last quantity of trades traded. And if it's pink, it's selling. And if it's blue, it's buying. So pretty simple, not a lot to think about there. Okay, I'm going to hit play here. Now I'm going to try and show you guys with my pointer what is going on here. So, okay, we've gotten long 130.50. We're about 5 minutes out from the interest rate decision. What I'm analyzing right now is pretty simple. Are we holding a level of value that is defined on the time price opportunity or the TPO? The answer is yes, we are. As long as we hold that value area without accelerating through it on the downside, then my long idea continues to have validity. Notice how I'm not talking about how much money I'm down. That is irrelevant. As long as I have a stop wide enough to give me the margin to work here, because remember, we're working. We are working with this asset. We are not gambling. We are working. As long as I have margin to work with this and assess and analyze and do a thorough probability analysis in real time based on my skills and my school of thought, then I can calmly and effectively understand whether or not I should be out of this trade or if I should flip to the other side and get short because I'm seeing signs of accelerated selling coming in on a potential interest rate decision. So you can see here that we're starting to tick down with quite a bit of silence, just sort of, you know, calm before the storm sort of situation where buyers and sellers are trying to kind of understand whether or not this is something they want to be in. And you can see here we've got 22 coming in, 22 contracts being traded between the 44s and the 45s. So I'm really focusing on these 44s. I really want 44s to hold here. If they don't, that's fine. But on an objective basis, the more that I see price snap up after hitting 44s with such a calm silence, meaning that, you know, price just sits there for a while and then snaps back up, sits there for a while and snaps back up. That's a huge reason for me to consider staying in this trade. And that's exactly what we do. So we're about 2 minutes and 35 minutes, or excuse me, we're about 2 minutes in to this trade now. We are waiting patiently to see if the price is going to start deciding or accepting, if you will, acceptance, remember, is it going to accept a dip below 44s, or is it going to accept a slow grind to retest those 3050s? Notice I'm not looking at 3058s or 3060s. I'm simply looking between 44s and 50s, a small range, a small initial balance that needs to find distribution on one side or the other. So let's go ahead and fast forward a little bit. So you could see we continue to hold 44s. Snap back up to 47s. Snap back to 44s. Another retest. And guys, when you see that, that means that somebody wants 44s and sellers are gonna willingly give it to them. 44s again. Now we're starting to break below 43s. Whoops. So we're starting to break below 44s right here. So that's my first signal to start being careful. And that's when I start hovering over the flat or the short button. So you can see here we're retesting 43s. What happens? And notice how the bid and the ask are starting to get a lot more active. And I basically say to myself, okay, 138s for now is going to be my hard stop because I'm not feeling comfortable with a break below 43s. We snap back up to 44s, and now we start seeing some weakness here. So you can see I've taken my stop off, and here's why. This is an important point. I didn't take this off on an egotistical basis that I knew that I said, no, the price is going to do what I want. I went back to my analysis and I very calmly did an objective analysis on where price would have to hold indefinitely for this thing to head higher. And it turns out that it was well below 133s, 130.33s. That's a key psychological level, 30.033. As long as we held well above that, I had no reason to get out of the trade, and getting out of the trade would have been a self-sabotage unless I let my stop run there. So on a risk-reward basis, if I'm willing to take a exponential opportunity like this one, then using 130.33, which would be, you know, 100 plus tick stop, $100 stop, at the very minimum, I can take one solid trade during the day in order to achieve a larger R&R or risk reward ratio. So you can see here, we're not even close to 130.003s. We've got a very steady hold above 140 evens, and we're starting to approach the decision. Let's be a little patient here. And you can notice that when my mouse hovers over, it's assessing, it hovers over the bid and the ask. What it's seeing, not just on the order flow ladder, but on the TPO. What kind of news is coming out? What are the other currencies doing? How are the stars aligning here in order to assist me in my real-time interaction analysis? Let's fast forward a little more here. And notice that I've moved the P&L to be invisible because I really don't want you to focus on that. I really want you to focus on interaction, on a simple bid to ask and last quantity of contracts traded basis in order to understand how to trade a fundamental event like this one. So notice 130.33s remain strong and 44s remain as a magnet of liquidity. So we're starting to churn a little bit. We're starting to churn a little bit. Getting 18 at the bid here. So I'm looking to see, are they going to get filled or are they going to snap the price higher here? Fast forward, retest of 44s, retest of 140s, snap right back to 42s. That's another very micro signal that people are willing to buy this entire spread with conviction. And then bam, interest rate decision comes out. You get a skyrocket into 130.77. So target one is hit. And then we've got our next target at 130.100s. So we wait, bam, 130.100s on the dot. And we are not flat quite yet. I can see that we're still live here. We wait to see if we're going to continue to rotate out of that. Retest, and now we're flat, and we cut in reverse and we short the 99s. And let me show you guys how that happened. Retest 100.08s, retest 100.08s, failure, cut in reverse to the 30.99s. And let me just point it out one more time. So take note of this number, 130.99s. It turns pink. That means I'm short. Short, and then bam, we start flushing below the 99s, flushing below the 99s, retesting the 88s, retesting the 88s, and break. So this is classic pound activity. A fundamental bit of news causes a spike, a parabolic spike higher. And then when everyone tries to buy it because of the interaction, everyone who was already on sides sells it and then sells it back to all those buyers, back to target number one. So this is a cut and reverse strategy objectively, where you wait for the highs where the liquidity gaps live. You take it to that on a long side or whatever side you're headed for, and then you cut and reverse that based on what you saw in the interaction of the news. And you can see we're trying to retest 99s, and we've already gotten out of the trade. But all in all, a fantastic way to express our idea objectively on the pound. And we can go ahead and show you how that went today. You can see here on the P&L that we had a 2-contract transaction that gave us $393.75 and a $506.25 off of 4 contracts on the initial move higher. And then we took 1 trade on gold today, and we might do a video on that later, but wanted to really focus on the pound for you guys and try to explain how we had conviction behind trading news, most importantly, right? Okay, so that being said, guys, that is all for today. I hope that you all have a great rest of your week, and that you don't feel lost or like you can't ask questions in the Profiteer room. So please, tomorrow, if you get a chance, jump into the voice chat, walk us through your situation, walk us through what you're doing, and feel comfortable asking questions. All right, take it easy, guys, and we'll see you in the next video.